what does it mean in wealth management? Because I think a lot of people, they have an like internal understanding what is the wealth management, but what does it mean in terms of your product?
I mean, when it comes to our products, I would say it's all about the trust, right? And what decisions are not emotional. Basically, they reflect identity, they reflect family, they reflect fear. And as you mentioned, when it comes to robo advisors, right, most digital tools are built for efficiency and not empathy, right? And it kind of assumes that everyone thinks like an algorithm. And what we've kind of discovered with many people, right from really looking at the business case back 5 years ago, even more than 5 years ago, when we started working on this as part of my executive MBA with Mannheim Business School and ISEC Business School. So Mannheim in Germany, ISEC in Paris. We worked on the business model for a year and then we kind of presented it. And then 5 years ago was when I really decided to take it into the market. It's really that many people, especially like women and underrepresented groups, avoid financial planning because they don't feel seen, right? And I have worked in the industry for such a long time, and it's really how a lot of products are being advertised as well. Traditional platform rarely reflect the realities of so many people. And this is where we come in the sense that really incorporating like cultural context, because if you look at Europe today, it's becoming bi or even tricultural, right? And it's really also understanding that the humans behind every form of digital product, every form of robo advice, or whatever we want to think about it. So what we've done is we've designed around behavioral science and cultural context. So it's not just crunching numbers and being efficient, right? Efficiency is super good, but also incorporating that there is some empathy that needs to be incorporated into the wealth journey. And like I mentioned earlier, we want to ensure that when we look at wealth management, wealth journey, it should be a right, not just a privilege for a few.
I'm always trying like to run through myself, like what is the experience and how I would feel. And I would say that if we face the interaction with the digital products right now, it's less emotional because it's rendered by machines. If decade or 20 years ago, you would come to the banking branch for different financial services and you still will interact with someone. And you mentioning building the trust and empathy, which is kind of opposite of what the applications and the websites they give in as interaction experience. How are you achieving that? Like what you put in exact like steps or exact experience to the end customer?
I think it's really when we look at, like you said, emotions and brain is taken out of it. But then finance is full of emotion at the end of the day, right? A lot of people still don't want to talk about money, and especially when it comes to different cultural contexts as well. So different cultures approach how money is being discussed, right? And again, when I go back to it, it's either joy, it's either anxiety, it's either pride, it's either fear, right? And really, no AI can replicate human empathy, which is why we combine the automation of the AI, whereby AI makes it a level playing field, right? So it's not just, okay, only the wealthy should be able to build wealth, right? So we combine this with automation with human empathy, right? And this hybrid model gives the clients both precision and understanding. So yes, a lot of platform takes away the behavioral concept. A lot of platform takes away the emotion aspect of it. But then when you look at it, how is it really serving a lot of people? So when we look at the data, let's go back to Europe because we're in Europe, right? When we look at the data, only 18% of the adults in Europe have financial literacy. So how do we ensure that more people are actually engaging in planning their finances? And if we continue to just churn out the same thing, then we are not really changing anything. And what we say is with PaceUp Invest, we incorporate the AI, yes, but then we also incorporate the fact that it learns the different cultural nuances of the individual that is using the platform, and it gives them more of the control and also more of the understanding to really plan their finances on the long term. And when we talk about really the financial planning aspect of it, there are different nuances that comes into place again, right? So it's also understanding the behavior, because it doesn't make sense when you have a plan for someone, right? So I can make a plan for you, Igor, and say, this is your plan, or you can see your plan already on the platform. But then you feel sick actually going through that plan, right? You don't understand it, or you just feel like, okay, it's taken out of my control. So this is why it's also important to kind of understand a bit of how our behavior can end up disrupting a perfect plan when it comes to our finances, or how can our behavior actually enhance that to ensure that we actually stay focused, we stay, how do I say, committed into the why we're planning in the first instance. So not leaving everything to just the machine, which is amazing, but also understanding our behavioral nuances that comes into the financial planning and wealth building. And this is what we've incorporated into our platform.
Maybe for our listeners, you can give some kind of examples how you solved a particular case, like how it was before and after, and it will give more like specific understanding to our listeners.
Okay, yeah, sure. So at the beginning, so when what we call the suitability and risk assessment, when you're doing that, we really make it hyper personalized. So we look at the financial personality of the individual, we look at the financial circumstances of the individual, but not only that, we look at the knowledge and experiences. So the financial personality aspect of it is where it then looks at the different behavioral contexts and nuances. So an investor or a user might come across as composed, as or either impulsive or confident. So let's say someone comes across as impulsive, right? When they've done that and they have a high level of impulsivity. When markets start to move very erratically, then it becomes this emotional aspect of them comes out. They might want to then go in and just withdraw all their funds that they've invested into, whatever they've invested into. So what our platform does is it's engaging, it reaches out to this individual and just lets them know why the market is acting this way. Okay, that is such a short term, not to have the emotion aspect of it to then go in and withdraw their money because they can see like something is happening in the market. And then it automatically engages with their financial advisor or their wealth manager as well to let them know that this person that has scored high on impulsivity, then they connect with that person and let them know why this is happening. So, for example, was during the whole Trump tariff period as well, a lot of clients were like, when it comes to, oh, what's going to happen to my investment? What's going to happen to this? So it's really calmed a lot of people down because of how the platform engaged with them on that emotional level, basically, in this instance. So that is an example of how when we're able to see the level of our confidence, the level of our composure, the level of our impulsivity, it helps us to stay invested on a long-term basis in this instance. Yeah.
Yeah, in my understanding, a lot of banks, a lot of products, fintech products, they try to step down from this emotional level because during the human interaction, during emotional interaction, sometimes some people can use this emotions and personal connections as a door for a fraud. So I am still thinking, like during I think you described, I was still thinking how we can avoid during a human interaction, a human connection, emotional connection, to avoid or to decrease the level of possibility that someone tried to fraud us as a financial institution, as a bank, using, sympathy, using some human basic emotions. How are you dealing with this? What's the best practices you have in your cases?
To be honest, I've not really heard about the human aspects of the fraud. Maybe if you can explain further on that? I can't really see where that is coming from, but because if you look at how wealth management is being done at the moment, right, it's very much, for example, for a high wealth individual, they always look at the behavioral finance aspect of it. So this helps them to actually think about how their wealth is going to grow on the long term, basically. So what we're doing here is democratize the process that is already kind of, when it comes to giving it to a one-to-one high net worth individual, when it comes to the mass as well. So the emotional aspect that I'm talking about here is really when the client is already investing. And at the beginning, when we do, so all the onboarding is done, or the KYC is done, or the other aspects of the compliance and regulation is done. So this is when the client is already investing at the beginning. And once they do the hyper-personalized assessment, it then looks at how the individual is, and then it's all about the ongoing of how the portfolio then gets to be stronger. So the strategic asset allocation that is done at the beginning, so that it doesn't compromise the goals, right? The time horizon, the liquidity, and also other aspects, the unique circumstances of the clients. It doesn't compromise it in a way that when short-term market volatility then happen, the client doesn't say, okay, I want to pull out of my investment because of what is happening. And this is where it triggers, the advisor understands the clients better, in the sense that this client is more composed, or this client is more confident, or this client is less impulsive, and they're able to provide a better service on that level. So it really has nothing to do with fraud and whatnot. So I'm not sure where the case study of that is from, but what our platform does is really to help the client and the financial advisor to invest on a long-term basis. And the nuance here, it's all about wealth building and improving financial literacy. So I hope I've been able to clarify like how the emotional aspect with behavior, finance, and economics links into the platform in that instance.
Maybe I can drive an analogy, because maybe it's kind of similar to dining experience, because if you go for the fast food, whatever you get is just commodity, like you get in the calories and that's it. But what we're talking is a fine dining, because what makes it really nice and pleasant, it's the human touch, because you're interacting with the waiters, you can hop on the bar and talk with the barman. So it kind of makes me think that the product is to drive and commoditize the premium experience to the people who were thinking that it costs a lot and it doesn't require like a net worth, high net worth person to experience the same premium service. Is it true as an analogy?
Yes, as an analogy, yes. So it's all about democratizing wealth and how people think about wealth and how they build wealth. So we're doing it in a way that it's how subjective it is. So what wealth means to you, Igor, is different from what wealth means to me. So it's really looking at how can I build wealth on my own terms, but then with the assistance, if I need it, with the assistance of my financial advisor or with the assistance of a wealth manager or whatever it is in this instance. So it's really, like I said, AI brings it on a level playing field. It removes a lot of bias that is in finance, a lot of bias that is in investment world. Because if you look at wealth gap, it's super huge. If you look at investment gap, it's huge between men and women. If you look at pay gap, anything that has to do with money and investing, there's a huge gap in that. So how do we ensure that the level playing field comes into place so that people feel like they can start to generate their own wealth, their own assets on their own terms? And this is where our platform comes into place, where we are helping financial advisors, we're helping wealth managers to really provide a better service to their customers. So it's not taking away their day-to-day job. No, it's really helping them to really provide a true personalization at scale and really focusing on the areas that really brings more added value. Because yes, technology is out there, AI is there, it's going to be, it's not going anywhere. So how do you use this effectively, efficiently, to ensure that not only are you attracting more clients that potentially does not look like you, right? But then looks like a woman, someone else from underrepresented groups that has money but is looking to invest, but because of the barriers that has been placed within the traditional wealth management journey, they don't feel comfortable, they don't feel confident. So this is why we've incorporated this cultural context into it as well, but also the behavioral aspect of it to really help. Not just only the AI aspect of it, but then the human can kick in when needed.
And maybe to put the pieces of the puzzles together. So definitely there is some space for the AI usage, because it can crunch more data and be more personalized. But you mentioned a human bias, and let's take I don't know, Robinhood. It doesn't care where you are, where you're coming from. It gives the similar results if you are high net worth or not. So I would say we have three buckets to compare. One is if the wealth management is provided by the wealth manager, who is the human, and it can be biased because maybe I'm a man. I used to work in man region, so men interacting with me, and then I'm kind of biased for other clients. That's clear. But if we take a look at the pure digitalization and the platforms like Revolut or the platform like Robinhood, they provide an ability to kind of touch the wealth management without any biases, because it will run through the regular compliance risk checks, risk appetite checks, your financial standpoints. And if you tick marked all the items, then you will be able to trade. And it doesn't feel for me that it's kind of biased. So what makes, or what you solve in compared to, let's say, Robinhood. Like they provide an ability to trade and actually do the wealth management in their platform. So what is the difference between Robinhood and your platform?
Kind of mentioned one key thing: trading and investing. They're totally different things. Okay, so if you want to trade, you can be a day trader and you have turnover, you pay your taxes and whatever it is. When it comes to investing, it's very much personalized in that sense. So you have to really think about, why am I even investing in the first place? Okay, what is my time horizon to invest? So it's goals. What are your goals? Because we all have different goals. So you can say, okay, Igor, I just want to go on Robinhood and I just want to trade, and this is how my portfolio will look like. But when it comes to investing, you have to look at it on a long-term basis and say, okay, what is my goal? Is it the short-term, medium-term, or long-term goal? And our goals can often compete with one another, right? And most of this platform cannot deal with how the competing goals will come into place. And then we also need to look at, okay, what is the time horizon that we're looking to invest for, not just to achieve this particular goal, right? So, and not everybody wants to have a goal, that's fine. But then we are serving people that, in the sense that they want to invest towards a goal. Either it's wealth building, either it's buying a house, or either it's sending their kids to school, or either it's a multiple goals within a 20-year period, but within the next 5 years, they have to send their kids to school. In the next 10 years, they have to do this. So how am I going to invest at this different period right now, so that when I get to that point, at least I'm able to have this, at least 75% of my goal is going to be achieved. So this is what we are looking at, not trading, but when it comes to investing. And it's all about developing a portfolio that it's super hyper personalized to you. So not just only traditional assets, okay, but also looking at alternative assets as well. That helps you to build a strong strategic asset allocation. And then you have the satellites around it, which is more about the risk management of it. So yes, Robinhood is there, Revolut is there, Trade Republic is there, and whatnot. So it's all about, what do you want to do? And we are serving, what our own ethos is for people to, those that want to build wealth, but then they have different goals along the way. How do they achieve that? And this is what we are providing the platform. And yes, you're right in the sense that, the likes of Robinhood, it takes out the human aspect of it, and all other things as well. But you have to also look at it in a way that it doesn't look into the different life stages of people. It doesn't look into the life cycles, right? So it doesn't look into the different, perhaps the behavioral and also the knowledge aspect of it. So yes, they're serving the markets, that is fine, but there's such a huge pool of markets out there that till now they do not understand how to use Robinhood. They don't understand how to, because they just say it's just the same thing. How does it affect me? How does it apply to, okay, what I'm trying to achieve at a certain point in time? So this is where we come in, basically, in order to not only provide this plan, but then guide them along the way. And also the ultimate end goal is for them to be able to then build wealth. But if you then look at the data between those that are using Robinhood and the Revolut and Trade Republic, we can compare and see the breakdown between men and women, and also the breakdown between the different intersectionality as well. So a lot of women are underrepresented groups still don't see all these platforms really how best for them to be able to use it.
Yeah, that's fair, because you mentioned during your presentation, you mentioned about the customers having, beside the classical traditional goal to earn money, and to provide some wealth for them, additional wealth for them, they have other goals, and depends on those goals, they are choosing different platforms. Most of the times when you are working directly with customers, as you are doing, I mean, you have, this emotional impact, you have discussion, you basically know your customer, not in the perspective only by papers, but like these customers, like their behavior, what they are thinking. What if to unite everything in one single phrase? What's the biggest goal people are having beside gathering wealth? What they impulse them to make this step, to make trading, or to put the assets in some wealth management tool? What are they? Is a fear that they will be, poor maybe, or something else?
Yes, it's not a fear of being poor, but it's really having financial independence, right? Which is very, very important. Okay. And also, so aside because let's just take away the thinking of wealth. I think you're looking at wealth as, okay, just as amassing this wealth. Like I said, it's really subjective. And also when we talk to them is really wealth is, okay, having these different assets. So if at any point in time they need something, they're able to either borrow against their assets or do something with assets, be able to sell the assets to then have the money that they need. So that is part of being financially independent. So again, I want to differentiate between trading, right, and also investing as well. So other aspects of what we've seen is like wanting to also prepare their kids, right, when it comes to generational wealth transfer, and also getting their kids up and ready gradually when it comes to investing, helping them to really understand financial literacy as well. So these are the things that we're seeing a lot of, because we do have B2B customers and we have B2C customers. So when we look at the B2C customers, these are the fears that they're looking at. And other aspects is because everyone is just we're living longer at the moment in Europe, right, and globally as well. And when we look at the pension, it's not sustainable. Okay, so if someone decides that they just want to stay with the state pension, is not sustainable. Those that are lucky to have additional pension from their workplace as well, they have to ensure that their assets actually outlives them, not them outliving their assets. So there's a lot of different goals that comes into place, and really how to then manage this gradually. But the end goal is always, when it comes to wealth is really net assets, right? Assets minus liability. How do I ensure that my future liability, I'm able to meet that, planning ahead? So this is part of the planning that our platform allows them to do as well, to really understand when they're going to hit that goal. And when it comes to the planning, how complex the planning might be. And most often times you need the human interaction to come in to really help, because it's very, very difficult to project future liabilities sometimes. And this is where the platform comes into place and helps the wealth manager as well as their clients to think about their future liabilities. So different goals, not just only wealth building, but also different competing goals and at different life stages. So we call it multi-stage time horizon, basically, on when they need to hit their specific financial planning needs to ensure that they have asset, they have the money or whatever it is at that point when that point comes. Yeah.
And maybe I will add, in this case, for me, it sounds like Robinhood or other platforms, they providing the tools, whether in your case, it's a partnership to understand the goals and achieve them, which is totally different, because that's a premium service that's working hand by hand together, rather than just providing the tool which you can misuse because you don't have enough experience and understanding what you're doing.
You've kind of hit the nail on the head, because if you remember the issue of the guy that was trading Robinhood, was trading options, he did not understand that options had two legs. So he just thought, oh my God, I've lost all this money. And then he committed suicide. So we cannot give tools if we are not educating people on how to use the tools, because that becomes really, really dangerous. Yes, there's so many tools out there, but we need to be able to understand, why are we using these tools and for what? And does it really attend to our life goals or what we're trying to achieve or not? Because at the end of the day, it's like, Igor, you plan for your business, right? Why don't people also plan for their finances? There's a goal every year with strategy and all that. We also need to think about how we can strategize when it comes to our own personal finances as well, and really looking at what goal we're trying to achieve. And this also helps us to reduce the risk management that comes into investing as well in this instance.
We talked a lot about the product itself, the market, the customers, but I think there is a hidden topic which is really interesting and essential, because delivering any kind of platforms like that, you need to have a team which is capable enough to understand what is happening on the market side, to be able to understand what is the product that we're trying to build, and still be able to deliver from technical and business perspective. Fintechs is a pretty complex and complicated process. You have licenses, you have technology, you have digital channels, a lot of things simultaneously. So what is your secret sauce or critical points to build the team that able to deliver?
We have a very lean team, basically, and I guess that helps us kind of move. How do I say it? I think I don't like to use the word agile, but I guess it's agile in this instance. And yes, when resources are tight, clarity is kind of everything, right? And when it comes to the team, what we always start with is why. Okay. And this is why it's also important in life to start with why, because, okay, for example, with investing as well, you have to understand the why. So not just copy someone because someone else is investing. Oh, God, I'm going to invest as well. So everyone that we bring on top, we have to kind of understand that we're here to advance financial inclusion, which ultimately is to build wealth. And that shared mission kind of becomes like our decision filter, basically, and really ensuring that whoever is coming onto the team really, really understands that. Okay. And also when it comes to, I mean, diversity is such a buzzword everywhere, but when it comes to diversity, we look at it in the sense that our team, we have different, not just in the knowledge, but also what we look like, basically. And different viewpoints also helps to reduce blind spots and really helps to kind of create technology that kind of feels human, right? Because yes, AI is everywhere and whatnot, but then we, like I always say, we still need something that feels a bit human as well. And also when it comes to like, it's really important to also have good partners instead of building every brick by ourselves. So we have most of the AI is in-house developed, but we have partnerships to keep us kind of like agile and compliant, while really focusing on what is really our own proprietary engine when it comes to USP that we deliver to customers. And it's all about co-creation, right? And also testing directly with financial advisors, with wealth managers as well, and individuals. And it's really important for them to give us the feedback, right? When it comes to, okay, what we're building and how we're helping them to solve solutions and reduce whatever workload they might have, increase their revenue or whatever it is. And it's really to ensure that every feature, it's really solving a real pain point, right? Rather than just a theoretical one I just pulled out of the thin air. And I think in a nutshell, I would say like this principle of having a strong purpose, partnerships, diversity within the team, and really the user feedback that we get is kind of allowed us to continue, right, to kind of still stay lean, but really delivering like the impact where it's needed. So I mean, it's not for everybody, but it's where it's needed. We're delivering this impact. So yeah, in a nutshell, I would say that is kind of how, because I mean, we're still young, we're 5 years. So it's really how to then continue to grow and move forward again with the regulation, with technology, and the different aspects of. So partnerships is really important, and also when it comes to user feedback as well.
We basically covered a lot of things today with different, aspects of a product and things. The last thing what we still didn't talk is about the technology. Is about how we can. I'm still struggling personally myself. I'm struggling where to find the balance between empathy in daily work, in finance, in fintech, and automatization. Where is this boundary when we should stop the button of empathy and start the push the button for automatization? In your case, what do you think? Where is this boundary?
I mean, when you look at digital product, it's all automated at the end of the day, right? It's all the same thing, right? Everybody wants efficiency. It's very much transactional based, which is amazing. But then at the end of the day, we have to think about, say that, yes, efficiency is super important, but then how do we ensure there's also inclusivity, right? And I think when we look at AI is a great equalizer. It lets us personalize at scale, right? And when we look at the traditional wealth management, it's served 50%, sorry, 5%, the top 5%. AI opens access to the other 95%. But then what it then does is it's really also incorporates the fact that once it opens this up to the other 95% as well, the hybrid aspect of it is where the intelligence comes in. So we can say, okay, we're going to just do the AI and forget about AI, or we're just going to do human interaction and forget about human interaction. When we put both together, right, when we pair algorithms with human advisor, AI handles repetitive analysis. But humans, when we put it in, it comes in with a strategy, and we are emotional human beings at the end of the day. We have what we call the elephant and the rider. The elephant is very emotional. The rider is cognitive. The rider knows where to go, but if you do not let the elephant or inform the elephant. And if elephant is not emotionally ready to go where the rider wants to go, the elephant is not going to go anywhere. So we have to look at it in a way that we have to do it together, the hybrid model. And we've seen that this has actually reduced the workload of a lot of our financial advisors by 25%, really freeing time for meaningful conversation and strengthening client relationship and getting more value add from there. And also, it's really all about when it comes to, again, we need to go away from the thinking that how finance has been for a long time and just continue to do it that way, because this is what the platform keeps or the platforms keep regurgitating. We need to understand, like, yes, there is pure automation that you can look at, but we need to also look at how AI empowers rather than replacing, but then incorporating how do we then get more people into the finance, which is most of the time emotional, most of the time cultural based. So let me just go back to that cultural base again, because we have different cultural nuances on how we've grown up, right? So I grew up in Nigeria, and Nigeria is very much matriarchal. Women control the money, they control the money, and in Nigeria, finance is the women up there. Moving to the Western world, moving to the UK, in London, when I started working my first job in investment banking, it was just like, oh my God, it was a big cultural clash for me because it wasn't what I was used to. So this is where the cultural difference then comes into place, where we can then input that onto the platform so that more people in different cultural nuances are able to determine, okay, investing is good for me, building wealth is good for me, and how do I provide that service better in a way? So I think we have to just kind of take a step back and see, has this worked for many people? Are we thinking about inclusivity, or do we still continue to want the exclusivity of just the top 5%? If we're looking at inclusivity, we need to look at it in a hybrid model. And it's really understanding that it's not a one-size-fits-all financial planning, which is what most of digital financial planning platform has. So incorporating these different aspects of it really helps more people feel included in their financial journey. I hope I've been able to explain it in a bit. Yeah, that that kind of sees where democratization comes into place, but it's not just only with the AI driven, but the human aspects, but then giving a bigger value add on that human aspects of dealing with different complexities that comes into wealth building and also when it comes to financial planning.
I never thought that automatization can help us to overpass the background and cultural differences we had. For me, it was a tool mostly, intercultural differences was mostly a social topic, a topic of you have to understand that person, you have to have empathy to that person, which doesn't share the same background you have. And I never thought it can be applied in this specific thing on onboarding of the customers, or KC part, or automatization of the process. For me, this is, thank you very much for such an interesting comment and response, because basically we can overpass a lot of barriers we have only by a right automatization in right place and mixing up with empathy. It's absolutely unique thing. You will not hear so much from people on the market telling about this. So thank you very much for this insights and this thing. It's absolutely unique thing you just told. And by the way, I liked the example with rider and elephant, because yes, this is one of the best analogy to explain a human interaction with AI in specifically in finance, and not only in general businesses. And that's absolutely giving a full picture, emotional picture, feeling how it needs to build, how the symbiosis between a rider and an animal, an elephant in this case, can create something giant, wonderful at the same time, but powerful and straight to the point. I mean, it'll go straight to the point. It's absolutely interesting analogy. And I think all our interview, basically last minutes of our podcast they are recording, this thing just brought up so much light into our discussion. And thank you very much for this.
I think when people think about financial inclusion, they always think about charity, right? Okay, inclusion, it's such a buzzword where it's more like, okay, this inclusion, no, they don't have the money. It's really smart business because the underserved actually represents the largest untapped growth market in finance. So we have to be really inclusive when we're talking about wealth, when we're talking about other aspects of business as well. So just wanted to quickly put that in there.
Thank you so much. That's a really good and insightful thing. And I'm definitely going to steal your analogy with the elephant and the rider. I'm using elephant analogies in other cases, but this one is really powerful. Thank you for sharing it with us.